What a catchy tune, huh? You can tell it's not Friday, but it is Wednesday. And it's time for our Berkshire Hathaway bi-weekly podcast. And joining us will be realty expert John Brodeen and a guest right after this.
Look, if you want that home, let's go get you that home. And it's okay to feel a little nervous. Or to not know what to look for. Because our network agents have the expertise to take the scary out of buying a home. Well, most of it. Now, let's go get you home.
You know, John, it's almost like you've never seen that commercial before. You turn around and you watch the whole thing. How are you?
All right, yeah.
Oh, maybe give you a little mic. How's that?
It just gets better with time.
I know it does, doesn't it? I like the music in the background too. How you been?
I've been good.
Good,
How about
good,
yourself?
good. Really good. Good. You know, it kind of sucks that it's almost October already, but
This is my favorite time of year.
Is
They're
it?
going to hate me for that.
Oh,
Yeah.
well.
Oh, yeah.
You have a big yard?
No, not bad.
Okay, you want to come out and work in mine?
It is a little bit of a slower time of year.
Yeah. You got somebody with you? Why don't you
Yeah.
introduce her?
So Shanna Field, Wintrust Mortgage. We work together all the time. We usually do probably a dozen deals a year together.
Oh, wow.
So, yeah, she's definitely top of the line mortgage in Grand Forks. So, yeah.
Shanna, tell us a little bit about yourself.
I grew up in Mohall, North Dakota.
Mohall. Wow.
Yes.
Okay.
Yes, went to school at UND for business, and I've been in mortgages for almost 20 years.
Wow.
Yeah.
That's awesome.
Yeah.
So I'm guessing we're going to talk today about probably lending
Yes.
and the whole process.
Yep.
I would imagine there's a ton of questions asked about because, you know, I've always told since we started doing this Berkshire Hathaway bi-weekly podcast, one of the first things you do is make sure you have got the money.
Yeah.
So why don't we go through some of these most asked questions about the lending process? You can kind of just take it away if you want here.
Yeah. So, what do you think are some of the most common misconceptions about the lending process, or lenders in general that you run into?
Yeah, I would say the biggest misconception is people think they need a large down payment
Okay.
to get into a home. The magic number, everyone's like, well, I don't have the 20% down. That's not a thing anymore.
Yeah.
People will come in with their parents and say, well, you know, we can help them with the 20% down payment. So minimum down, I mean, there's plenty no money down, first-time home buyer programs. Probably worst case scenario you're looking at for a down payment would be maybe 3.5% or 5%.
wow.
And
So-
that's if you don't qualify for the no money down programs.
So where did this 20% number ever come from?
Right. Well, in order to avoid mortgage insurance is just default insurance that's force placed on there because your chances of default is what historically says if you have less money into the home, that easier to walk away from. Right?
Sure.
So with that being said, I think people just assume that they need that to avoid that insurance, but you know, paying $50 for mortgage insurance per month isn't a deal breaker.
No,
Still
no.
gets you into the house.
So if somebody gets a hold of you, John, and says, I really want to buy a house. There's a couple I've been driving around and I've seen them on whatever, maybe, you know, even on the podcast here. Is the first thing you do then is say, okay, let's go get a hold of Shanna and let's see what we can get rolling here?
Yep. Getting pre-approved is usually the first step. Before they even start looking online, I encourage that they get pre-approved. Some of the things that can go wrong if they don't do that is they could be looking in the wrong price range. A lot of people might start looking online and, you know, start developing their expectations around the homes they're looking at online. They're like, oh, we need a master bath, we need a third stall. And next thing you know, they're looking, you know, in the mid 400s or something like that. And if they haven't met with a lender, they could be in a position for some big disappointment if they find out they qualify for less than that.
Great. I'm the one that disappoints them.
Yeah.
isn't
Yeah,
it?
I
Nice,
suppose
right?
you're
Doesn't
the
that
one
make
with the
me feel
bad news
good?
or the good news.
That's why we want them to talk to her first, because if you find out that your max price is $300 worth where you want your payment to be, and you begin looking in the $300 or $300,000 price range, you know, you're going to start to get a really good feel for the market in that price range. You're going to be really excited when you see a nice home come up for that price, rather than if you started at $450 and you sit and, you know, go on your own for months and months scouring Zillow, and you've kind of developed these expectations. It's a huge letdown. And then the stuff in your price, it basically is going to make the home shopping process is supposed to be exciting and really fun. It can basically take all the excitement and fun out of that process if you don't have the right expectations and you think you can afford more than you can or something like that.
Right. Yeah. The first question we ask when we pre-approve people is just, what's your goal payment? If you want your goal payment under $1,000 and you're looking for homes priced at $300,000, I'll let John break that to them. That the payment's going to be too high.
It's not going to be pretty.
But at least then we can tell you, okay, if your goal payment is this, you're pre-approved up to more. But if you want to stay with that payment, look for homes priced in this area.
So, Shanna, if somebody comes up to you and they say, I want to know if I can get the money, if I can be pre-approved, do they give you a number or do you just find out what their max is?
Yeah. So we have what's called like kind of the 3 C's when we do the pre-approval. Can you guys guess what they are? Any of them?
Credit.
Income
doesn't start with a C.
I do like that they have a job or
Yes,
an
a job
income
is good.
stream, so that's good. The 3 C's are capacity, credit, and collateral.
Okay.
So those are the things that we're looking at. Capacity, we want to make sure that your debt to income ratio, you have the ability after your other debts to make the mortgage payment. So that's a big one that we look at, and that one's going to determine what your max qualifying is.
The only 3 C's I knew about were for diamonds. Clarity,
yeah.
cut, and color. Yeah.
I remember that.
Okay, now one more question for you, Shanna. How long does it take to find out if you've been pre-approved?
Right. At Wintrust, we guarantee it within 24 hours.
Oh, okay.
So if usually people can set up an appointment, they can do it over the phone, or we have an online application. So what happens usually is somebody finds the home that they love, and John's like, great, have you been pre-approved? And, oh, no, I haven't. Oh, there's 6 offers on the house. What do I do? We're able to turn those really fast.
That's one of the scenarios where it's really important to have a good lender. If you're working with a huge lender, let's say like one of the...
Or an online lender.
Like an online lender. Like let's say USA, for example. There's no way they're going to get you that pre-approval in time, and the process is going to be a disaster. But Shanna really gives you a legit shot at getting that house, even if you're kind of, if you're a little bit behind and you haven't even gotten that done and you're ready to offer on a home, she can make it happen. She's done that many times, especially with how hot the market was like this summer and spring. Many times where she was able to get that pre-approval out in time so we could be competitive, versus there's a lot of other lenders that I've worked with in the past that, it's just they're not able to do it in time, and then the client ends up really disappointed. And, it's a little bit on the client as well. They should have their ducks in a row before they're ready to offer on a place, but Shanna's bailed a few people out with that.
Yeah, people will call me, what do I offer on this house? And then they'll ask you, like, what's your payment? So sometimes they get our roles mixed, that each one has their separate role. I'm like, definitely not
my job.
telling you what to offer.
Now, is it a smart thing? We've talked about this time and time again. If you're looking to buy a house, start this process a couple of months before you're really ready to. But is it a smart thing for people to know their credit score before they come and even start talking to you guys about possibly buying a house?
Yes, definitely. So the pre-approval is usually good for about 4 months. But if you start the pre-approval now, and that's another misconception that, hey, if I've had credit dings or any, bad hits, late payments, bankruptcies, I'm not able to get a loan. That's also not true. We can do a loan after 2 years from bankruptcy, most cases, assuming okay credit has been established since. So if your credit isn't quite where it needs to be, at least that gives us some time to work on it. We have simulators that will tell you what you need to do to get your credit score up into a good place. Maybe you have a judgment that you didn't know about. Okay, well, it's $2,000. Okay, that'll take me a couple months to pay off, and then I can come back. So at least it kind of gives you a roadmap on where you need to go from point A to point B and get you into the home.
You mentioned a lot of what people hear isn't true. Now, I'm going to tell you what happened to me years ago. It was because of hospital bills. My credit score took a pretty big ding. I know I went to try to buy a new car, and I couldn't get the loan. But I got a nice mortgage to buy a new house. And it never even came up. I mean, they wouldn't tell me I couldn't go buy a car, but I bought a house.
Right.
And so, it does work. There's just things you got to go through, but you're not going to know this until you do go through the process.
Yeah. And is that something where maybe before the lending restrictions tightened up quite a bit, where they could have gotten away with that, where you probably couldn't get away with that now?
Yeah, sometimes it's a circumstance, right? So if we can document what happened, why it happened, and why it won't happen again, that's definitely a good, there was a death in the family. Now I've reestablished the bills. We got our settlement statement. Everything's been paid, and you can see that history on the credit report. We definitely try to make something like that work.
Yeah.
So when you meet John and you meet with a potential client, do the three of you then meet together, or you just kind of go one-on-one and then you one-on-one and then them one-on-one, or how does that work?
Usually the second option.
Okay.
where I'll meet one-on-one with them. I'll pass along Shanna's information. And, some people opt, like you've got the online application, which is really nice, where if somebody's got a really busy schedule, they can't fit in another meeting or something like that, they can start working on that stuff themselves and start putting their information in. And of course, you're happy to meet with people if they want to meet. It's usually separate meetings. Now, we were just talking about debt to income ratio. One of the, obviously this goes back to why it's important to talk to you well in advance to make sure this sort of thing doesn't happen. But I've had people, like, maybe they have been thinking about buying a home for a long time. They've been thinking that they're going to be able to. And then let's say a scenario here where they've got like long-term student debt that has a decently high payment, and then they have a high vehicle payment as well, but the vehicle payment's for a shorter amount of time, and they've got money that they are saving each month, and their debt to income ratio is too high to buy the type of home that they want. Would you focus on that large chunk of student loan debt, or would you focus on the short-term debt with the higher payment? If you're going to pick one to pay off faster to improve your debt to income ratio.
Right. Yeah, we would definitely look at the highest payment, because as soon as you get rid of that, we don't really look at kind of what the interest rate is. We're looking at debt to income. So if your payment's higher on that, and sometimes we can be creative. Somebody will have a larger loan payment, and hey, would mom and dad be willing to refinance this vehicle into their name for a couple months to get you into the home, which negates that from you, and then you don't have the money that you have to shell out actually to that payment.
Oh, sure.
So that's kind of a good way to kind of help get around some of those things. So we try to think of creative ways to make it work. Sometimes on paper it doesn't, but if we're like, hey, if we do this and this and this and move this here, and instead of when you sell your manufactured home to put it towards this, let's pay off some debt, and then do a low down payment program instead of using all that money towards a down payment, and then we can get them a little bit more house.
So in my terms, that would be finagling. You can do all kinds of finagling, can't you? Even the people, maybe they're kind of on the fence and they're thinking to themselves, there's no way they're going to give me the money to go buy a house. But you're not going to know that unless you go talk to somebody.
Yeah.
Right.
And you're not going to know, maybe, like you said, they think they can buy, or they think they can't buy a house, turns out that they can, or they think they can and it turns out that they can't. Either way, they need to find out in advance and see what steps they need to take, because if it's a 9-month process to get their situation where it needs to be, and they sit and shop for homes for 9 months, they've just pushed back that.
Start to burn out and the whole thing and
they've
get
made
down.
That process, they've turned it into an 18-month process when it could have been a 9-month process if they would have contacted you right away when they should have. So in that sort of situation, whatever, like the thing that's going to help you get to where you want to be is eliminating that higher payment, focusing on the higher payment first. If you have a $30,000 car loan that the payment's just as much as your student loan payment, that's $100,000, focus on that car loan, because you're not going to knock out that $100 or $100,000 in student loans in the amount of time it's going to take you to knock out that $30,000 car payment.
Right.
Okay.
It's a process. Usually anytime that you meet with us or send us an application, we're going to, like I said, kind of give you that roadmap so you know what you need to do. We're not just going to, if your credit isn't where it needs to be, we're going to tell you what you need to do to get it where it needs to be. So it's not that, no, come back in a year and we'll see how things go. Well, if you're not doing the right things in a year to make your credit score better, I'm going to tell you the same thing next year. So at least you're going to know what you need to do. And most people, when they come in, know that maybe there was some things that they need to improve on, and at least then they'll get the answers that they need.
A lot of people are afraid of lenders. They're
Right.
scared. They think they're scary, like you're going to have your appendix removed or something. But it's not that hard to go talk to a lender or a real estate expert, is it?
Yeah, it was funny because I had a client in, and you could just see the tension when they were sitting there, and I'm like, just breathe. You look, you have good credit, you pay your bills on time, you have a job. Like, these are all good things. Just you could just see kind of, they were like, oh,
Yeah.
just so nervous going in. I'm not a scary person. I mean, do I look like a scary
I don't look too
person?
scary to me.
Come on.
John, now I don't know about him.
No, I'm not scary either.
No. John Brodeen, realty expert. How do we get a hold of you?
701-213-5428. You can text me on that number too.
Okay, and how about Shanna Field? How do we get a hold of you if somebody wants to ask some questions?
Yes, my website is mortgagesbyshanna.com, and the number is 701-738-0651.
Well, I tell you what a team, huh? You got realty expert John Brodeen. You've got lender Shanna Field. What a great team. And also, if you want to add to that team, maybe you're thinking about buying or selling that house, and it needs a little bit of work, well, team up with these two in Executive Properties. They can get all types of commercial and residential work done for you. Doesn't matter if it's concrete or bathrooms or kitchen counters and tile and all that stuff. These guys are incredible. Get a hold of them, Executive Properties, 701-330-1273, or go to executiveproperties.org. John Brodeen, realty expert. He'll be back on Friday. There you go. That's the first of 2 of your Berkshire Hathaway bi-weekly podcasts.